we now have non-technical practitioners shipping to prod, I think that sets off alarm bells for me.
The volumes have never sort of caught up, I think, with what perps have done. There are serious institutional players doing decent size.
They want to punt whether the stuff's going to go up or down.
So Wintermute out saying that their institutional OTC options desk is doing 4 to 5 times the volume that it has done previously, which is, I think, an interesting thing to note, given that our view of the option space in crypto has always been a bit, what's the point?
Yeah, sort of like if you've got perps.
You got perps, they give you an asymmetric upside if you know how to manage the liquidation side, and just in general, a feeling that you were never going to get to the point where options were a huge part of the ecosystem if you didn't have the long only holders.
My view was always like retail trading options is just a quirk of the regs in the US, right?
Yeah.
You know what I mean? Retail, they want to punt whether the stuff's going to go up or down.
Yes.
Right? So you want to do that with a linear product.
Yeah.
Like why the fact that that's why they're all trading 0-day options.
Right.
Because they basically behave like linear products on. I'm not a vol quant, but don't they? Sort of.
Well, I mean, or you just want a huge amount of asymmetry in your payout. So
Yeah.
a little amount of premium amount and with potential massive upside.
Leverage.
More convexity.
Yeah.
And so, the vol space has evolved for quite a long time within crypto because, I mean, Deribit was a very early institutional level exchange, 2018, 2019. But the volumes have never sort of caught up, I think, with what perps have done. And a lot of the market is OTC. And so I think Wintermute indicating that there are serious institutional players doing decent size there is an interesting point. Particularly, they're highlighting that a lot of this is sort of call overwriting stuff that's going on, which means that you normally are along the underlying and then are selling an upside exposure, to pick up an extra bit of premium on your position with strikes normally set somewhere where you'd be happy to sell the underlying anyway.
Right.
So you'd gain.
You take profit.
You take profit anyway.
Yeah.
So you juice your position by selling the option that's way above where you currently hold the asset. If it happens to get up there and you're obligated to sell it, then you're kind of happy anyway.
Yeah, because my underlying's gone up so much.
And you've earned this yield from selling the option. So this sort of behavior happens in equities all the time. Sort of yield.
It's a strategy. It's a vol shop strategy.
Absolutely. And you can do it, depending on how you're structured, you can do it on downside stuff as well. And for them to highlight that this is beginning to impact the space, depress sort of implied vols within some of the majors, is kind of interesting because it's a play that we've seen in equities
So is that
for a number
done,
of years.
Again, not just being a Delta One guy, basically my career, does that mean that when these options are traded in, say, the equity space, which I presume is quite mature, they're still OTC? So you're not going to, CME...
So
equity options order book to go and get the strikes and the stuff that you want to have this covered call thing? Is there not more liquidity there that way? Is the OTC really the best way to do it?
Certainly when I was in the space, the listed options were good for shorter dated stuff. In general, if you wanted to do size, the screen wouldn't normally support that. So even for the CME product, if you want to get to sort of block levels, you were normally arranging those transactions away from the screen.
Right, okay.
And then they will go through the exchange and they will settle into your clearer in the same way. And so sometimes it's
like an auction beforehand? Or
no. It's like, so...
Or would it be a block trade that would appear in the book?
Yes, exactly. So when we were doing sort of size, the hedge fund, we would line up quotes from 2 or 3 desks at the banks. Now, they were often speaking to the market makers at the back end, like Susquehanna, Optiva, and W.M.C., getting the pricing back. And eventually we ended up talking direct to them. But you get the pricing back, you choose who you want to execute with. It goes through, in the sort of trade feed, you will see it. It won't be in the same time as the rest of them. And then it will drop out to your clearer. And often you do that if you're an institutional money manager because you have a mandate to not do OTC. And you have to trade a listed product. For instance, certain UCITS funds can only trade listed instruments as opposed to doing
as part of their regulation.
It's just the way it is. And so that market doesn't exist, but it's not the screens that you'll see sort of flickering on trading screen and stuff like that. But you'll go and get the markets and it's a listed product and it's CME or equivalent contract. If you work under a slightly looser or a more prescriptive or a slightly looser regulatory regime, less prescriptive, you can go to a bank or another counterparty if you have the right ISDA and collateral agreements with them and say, can you give me an OTC contract? And so That could be completely bespoke.
So this is the kind of thing when I was working on as an FX quant, and I had a strategy on Hong Kong dollar, and I wanted to hedge out the risk of a DPEG. And it was like, there's no way to really do that. Then somebody gave us a price to buy the option of that happening within a year or something.
And the OTC market is inherently OTC anyway, and that falls over into the options as well. So yes, you'll go. I mean, that's an incredibly liquid market. So its structure underneath will be all the PBs. And so there's all this mechanism around making sure that your collateral and your margin correctly. But yes, you'll go to a desk somewhere and they will quote you a level for it. And interestingly, the FX market quotes in vols as opposed to in sort of premium, whereas equities always quotes in premiums. And so for equities in general, if you want to do size and you want to stay sort of out of the book and not be seen impacting the underlying market, you might go to a desk and get a quote from them. If you need to go anything beyond sort of 1.5, 2 years, it might have changed. But certainly when I was doing it, you would have to do OTC. Because there's just no liquidity on the screen. No one's playing in those.
It's too long for your models to work out to quote where you're going to quote.
And it's just, there's no liquidity there because people know that it's, it's a vol market that's OTC. And so within the crypto space, you would want to tie your expiries to a listed expiry so that you have a nice underlying hedging instrument. But yeah, there's definitely a very vibrant OTC market, and Wintermute's news is sort of testament to that.
Right. Okay. So do you think this is just these larger vol shops basically turn around going, yeah, well, we're going to put our strategy over that works for single name cash equities into
possibly
BTC and stuff, and they're just getting more confidence with it. And
some of the more sort of aggressive hedge funds, Cayman-based vehicles would certainly be able to be long Bitcoin and then start doing this as a way. Particularly if you think that the price is pretty stable where it is, but you want to put maybe 10-20% extra into your portfolio, and you sort of win if the underlying price goes up.
And so this is because obviously there's a lot of talk about this on people trading the 0 days and this gamma squeeze. Where basically people think that the stock market is going up and up and up and up and up because people keep buying these 0 day calls, which the market makers have to go on the hedge, and then you have this which causes them to have to go and buy more stocks. Is there something, the opposite thing going on? So vol is being compressed because institutions are coming in.
Institutions are the ones that are selling.
They're selling,
The dealers will end up with loads of long gamma, which it is great, but costs you every day in terms of your theta. Your mark to market is good if you've done a nice trade, you bought it for lower than it's actually worth. Clients happy because they're picking up their premium, but you're left with something which decays in terms of value over time. And you need to monetize that by trading, as we know, you need to monetize that by trading the realized variance,
which causes it to,
which means you need to sort of buy when it's low and sell when it's high. So you then
end up compressing the vol. So that could be one reason why we're seeing
sort of range bound trading. Particularly if it's been sort of large on BTC.
Okay, interesting.
And so it's a nice information point because
that was as close to a macro call on the BTC price being range bound. I can almost believe that. I can almost believe it.
What even is the BTC price? Tell me about Coinbase. What's going on?
So
have we mentioned them in every single pod that you and I
Brian,
have done
come
together?
on the pod.
Right, well, did they do a pub after us?
They copied us. Yeah, exactly. Yeah. So
there's many things.
Imitation is the sincerest form of flattery. There's obviously a lot of discussion about this in the space, not necessarily just particularly crypto related, about tech firms laying off vast amounts of employees because of
zero employee tech firms.
Yeah, exactly. Would you trust a one person AI tech firm? But yeah, so basically, employees being laid off now. Did
you read his memo?
Yeah, that was what scared me a little bit.
Because he's clearly a smart guy.
Yeah, obviously. I don't think there was any worry about that. But what I didn't like about it, so as somebody who leads a technical team. One of the things, some of the words that you put in there, if you want to lay off 15% of your workforce because you want to improve your revenue per head and you think that that's 15% of your workforce.
Don't wrap it up in something else.
Yeah, I can kind of see that 15% of people might be shit.
Yeah.
Right, what does it Goldman do?
Bottom
10% every or so the story goes.
Yeah.
Right. So yeah, if you want to do that, mate, go and do it. Right. But to angle it in terms of its AI productivity, and we now have non-technical practitioners shipping to prod, I think that sets off alarm bells for me.
Well, it did when their website went down the next day.
Yeah, well, exactly, right? And I do think, we're seeing this real sort of juxtaposition where everybody's banging the drum of AI productivity and isn't it making everything amazing, making everything amazing? Well, whilst also then not quite grappling with the fact that it's not perfect.
Yep.
And it ships slop and bugs every day, even with people who know what the fuck they're doing.
Yeah. And if you're doing like super critical stuff.
Yeah, exactly right. So we've got this like AI psychosis going on at the moment. So then I'm like, and which is why I think we've seen this Jevons paradox in terms of the number of software engineering jobs has gone up,
right?
Because I actually kind of can do more with more engineers, but I still think you need
scrutiny.
You need scrutiny. You need somebody who knows what they're doing. And I think even with people who know what they're doing, the AI can subtly get these bugs in. So when Brian says, "Oh yeah, we've got non-technical people shipping to prod," I would like, if I was an investor,
Brian,
I'd be like, what do you mean? Is that like marketing people shipping videos to YouTube without clicking,
or is it them changing the matching engine?
Oh, you're changing the matching engine with people who don't know what the fuck they're doing. So like that's where I would like a bit of clarity.
Do you one small pushback? Do you think he's just trying to think 2 years in the future when these problems that you're highlighting, which are genuine because we see them every day in our business? Do you think he's just going, I'm preparing for a world where that has gone away?
Maybe when you run a company of that size, you have so much more data about these trends, right? And so maybe they're measuring metrics that you wouldn't start measuring until your job was to start thinking about, I suppose a company of our size, and even twice as big as ours, you're not really measuring metrics per se about like PRs and bugs shipped and all this kind of stuff, which
speed.
You obviously kind of got some feel for it, and you know when your deadlines are. But maybe when you get to a company of 4,000 or 5,000 people, you've got so much statistical data that you can actually start to pick,
and potentially like it takes that much longer for it to move as a whole.
Yeah, exactly. So maybe, but I still thought the way that it was worded, I found worrying for what is meant to be a tech company.
Yeah.
But yeah, so I think but also, is it just because they overhired in 2021?
Right. So, the cynic in me reads it goes,
it's free money. You hired too many people.
There are a lot of people who went in. Good people went in, but you in a world where are increases in productivity, maybe away from the technical side,
and also their revenues are down on trading, right?
Right.
At the end of the day, there's less volume going through the market as there was in 2022. And so if you are quarterly earnings based on trading revenues and you're trying to, one way to improve some metrics is to have less people for less revenue, right?
But be honest about it. Say what it is.
Yeah.
Okay, interesting. We will continue to talk about Brian, Coinbase, and AI on this.
Of course, we'll. Frontier Tech
Pod. It's because it's no longer just a crypto pod, right?
Yeah, it's finance
pod.
Yeah.
I've got a gilet for you outside.
Oh, brilliant! I'm loving it. Can't wait.
Very enjoyable. Thank you very much for chatting. I was going to sort of say thank you as a guest then, but then you're not a guest. Thanks for coming in. Mate.
Is it just you've been with so many others that you've forgotten what it's like to be with me?
It's always adding a bit of spice.
Thanks, guys.
Oh my god, my DOMs, I can't actually get out.
You definitely want that. 20-minute gym session.
Oh my god.